Ladies and gentlemen, good evening. This is Christopher Aaron. It is April 11th, 2018, and I am traveling. I am on the road today, but I wanted to make a quick video to show you what is happening here in the gold market. This is a very important time. We're seeing gold gearing up, preparing to break these 2016 highs, and I'll just tell you, there's certain periods of time that when I go back in my own memory, and I remember studying periods in the gold market, such as 2007, 2008, 2009, very intensely in the same type of way that I do now by studying the charts. And I remember certain lessons from back then that apply today. I believe that this is one of those periods where if you're truly a student of the markets, you are going to learn so much from what happens here in gold over the next 6 to 12 months. The strength or lack thereof of this breakout that is gearing up in gold is going to tell us so much about what to expect over the next several years. So the point of this channel is simply to try to break through some of the rhetoric and show you in the most clear way possible exactly what is happening in the gold market on the charts. So we're seeing today, this is the 3-day view of spot gold prices, and we are seeing another attempt here to break those 2016 highs. We will put that into perspective in just a moment and show you how this attempt here is different even from the ones we have seen over the last several weeks. Silver, something of a nice move today, although giving back a significant portion of these gains. But I'll tell you what, silver has still not changed its technical outlook. It is still grinding after breaking downward through that symmetrical triangle that we were looking at. And so nothing has changed yet in the silver market. And this fits into what I was saying earlier, that we really have to pay attention over just the next several months here, especially as gold breaks 2016 highs. What happens to the price of silver? Because if silver continues to do this kind of grinding and failing to break key resistance levels as gold is making repeated new highs here over the next several months, it's going to be a major warning signal for later this year. We may have to alter our strategy. Very important time to pay attention to the relative strength between gold and silver. So let us bring up the gold chart. We're looking at the 2.5-year perspective from the major low that formed in December 2015. We have seen a series of waves, higher and lower in the gold market, higher and lower, but forming an important higher bottom than the 2016 bottom here, and another high now forming. Let's bring up the key so we can pay attention to what all these colors mean here. Blue, right here, the royal blue is always referring to the primary trend that we are concerned with over the intermediate. Intermediate tends to mean 1 to 3 years. The intermediate term time frame, primary trend line that we're looking at here is the rising support, a series of rising lows clearly forming in the gold market amidst a horizontal resistance. And we are seeing here, for example, the attempt that is now happening to challenge these 2016 highs. And I already see in the mainstream media, I see some people coming out and writing articles saying, well, the attempt that is happening right now, this looks quite similar to this attempt back here from 2016. So therefore, we have reason to suspect that this will fail again, and we'll see another $200 drop within a few months as we saw in 2016. Now, I believe they're categorically wrong about this at the present time, and for the following reasons. We have to zoom in on the closer multi-month action here that defined these two periods. So let's do that. Let's pull it up, and we can go back and we can look at the difference in how this market developed on a shorter term time frame. This really tells us a lot about what to expect. Of course, the context being key. When we look at the 2016 peaks, this was after the Brexit surge. Here was the Brexit day move higher, over $100 move higher intraday, and then continued strength over the next several weeks. When we saw that top form here in the 1378 region for gold, we saw a clear set of declining, 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 declining peaks, forming a very nice best fit blue trend line here in the summer of 2016. Horizontal flat support line seen tested 3 or 4 times here. And so when you have a declining resistance and flat horizontal, this is, all things considered, a bearish pattern over the short run anyway. Sure enough, this resolved lower. Now we're seeing here in the most recent example, although this is happening in the same region, you could see that what has developed here with a flat, once again, flat support, what was declining resistance, look at what has happened just today. The gold market has made this attempt and finally broken through this series of declining peaks. So these are the kinds of things, if you are someone who wants to follow what is actually setting up in the market itself and sort of move away from some of that extremist rhetoric on both sides. We hear constantly the calls for 5,000 ounce gold this year from certain extremists, and we also hear gold's crashing down to $400. There's a lot of this going around. But if you want to really pay attention to what we see in the market itself, we can see that something different has just happened here in the gold market compared to the peak in 2016. So there is a break in this trend. Now, this doesn't mean the price is going to skyrocket, but we can see the market is changing gears. So let's move those away so we can once again look at the big picture here. And this is why, you see a break and a downtrend from a consolidation. We're talking major attempts here. If we call this one major attempt, a second major attempt, a break and a downtrend from a third series of major attempts to break through a flat resistance level, this market is getting ready to break that. That is the message of a market that breaks a short-term downtrend amidst a consolidation period. Where is it bouncing? Of course, right above the support zone. And mind you, this support zone was not just drawn in over the last couple of weeks. We drew this green support zone right here back in July, August of 2017. And we said gold would not fall below this green support zone as part of this process. And sure enough, that has not happened. So there is merit to paying attention to the trends, to looking at where the large buyers and sellers in the gold market are coming in. That can teach us a heck of a lot about whether or not we should fear for another major decline or whether the decline may be more moderate. We can never get every single twist and turn exactly correct, but we can truly learn a whole lot about what to expect from the major trends. And I will tell you this, the big point, now we're talking about this with silver and we're talking about with the mining complex, the big point, what happens here to silver and the mining complex as gold breaks its 2016 highs? I would basically count this as this is the closest thing to a foregone conclusion that we are going to break these 2016 highs. But what happens to these other markets when that occurs? That is the key if you are a long-term precious metals investor, to observe how this unfolds and how these other markets respond. If we see something like a lackluster breaking of the resistance zone here, and if we see a continuation of the grinding price action, especially in silver, that's going to be a major, major warning signal setting up for later this year that it may be time to liquidate some positions. And I will have no problem making videos at that time. After all, I was making videos, you can go back to the founding of this channel in late 2015, I was making videos here. And many people were calling for gold to fall lower, below 1,000. I started making videos here. So I have no problem changing my tone if the signals tell me that there is reason for caution later on this year. We have to observe it. We have to pay attention to the market itself. Hope has no place in these markets. We have to have a defined valuation metric and a defined way that we can observe likely probabilities. So we were speaking about gold in relation to silver. Let's also look at gold in relation to the very companies that dig this metal, this incredible metal, out of the ground. We're looking at the GDX large cap gold miners fund. Now there are a few silver miners mixed in here, but the vast majority, especially on a production basis, is gold mining. And we're looking at the price of gold here right below. And what can we see? Very obviously, the immense lagging, gold challenging these 2016 highs, the immense lagging, this consolidation that the gold mining complex has been in for the last 15 months now, working on 16 months. So we must observe what happens here with these markets. All things considered, if this is one of these rare occasions in which the mining sector is simply wrong, and we've looked at occasions like this in the past, if this is the case, then as gold begins to advance above 2016 highs, we will be looking at the miners, at the very least, playing catch up. And from the present levels right around here, 22 on the GDX, back to 31, just representing the 2016 highs. Forget about advancing beyond 2016 highs, but just to get back to the 2016 highs, we are looking at a 50% increase across the average gold miner. Of course, certain ones that have made fundamental progress or that have found a new discovery or advanced a new discovery, as some of the companies that we're looking at, they should be valued above their respective 2016 levels. But this is the average. The average company should do this as gold is moving higher later this year. So I believe there is a major potential here for a catch-up effect to happen on a relative valuation basis from gold to the gold mining complex. Now, once again, if we see gold begin to claw its way higher into the 1400s within the next several months, which is my expectation, and if we see the miners really continuing to lag here, once again, major warning signal will be setting up. Not a short-term warning signal, a long-term warning signal. So these are the things to pay attention to. These are the things that we cover week in and week out. There's a premium research service that goes out to subscribers that covers all of these aspects, the latest analysis, latest thoughts on everything impacting the price of gold, silver, the GDX, and the individual miners that we are buying and selling here. If you are new to the precious metals or would like to discuss your situation one-on-one, please know that I work with individuals simply for the best interest of paid consultation clients. I take no funds from any of the companies that I profile. I simply look out for the best interest of individuals. So we are on the footsteps right now. And like I said, once again, extremely important time, not only if you're invested and you're just hoping that this ship really starts to take off, which, look, I am, but that's not the only reason. If you're a student of the markets, if you're someone who wants to learn what is happening now so that you can apply these lessons later on in your life to any market, maybe even in the next precious metals cycle, 10 or 20 years from now, just as I am from the previous cycle, applying lessons myself to this portion of my career, I would just say this is an immensely important time to be paying attention to these little twists and turns that we are watching. So thank you very much for tuning in. The next update will be 1 week from now. I will see you then.